Hi, I'm Patrick Reed from the Adamus Principle. Loads has been happening last week. Global slowdown worries. The bond market had something to say. German PMI was a horror show. And, you know, a lot of dovish central banks, especially on Wednesday with the FOMC, indicate all is not well. But I'm going to focus on some dollar CAD slides today and a little bit of euro dollar. So the first slide we've got here, dollar CAD and swap spreads, the 2-year swap spreads. This clearly has a yield advantage, and it all bears good setups for selling Canadian. So this in itself is not that, it's not 100%, but it does suggest more weakness on the CAD side. I think every central bank has been dovish and blinked. The BOC has some more to come. So the only flip side to that is on the oil, this is inverted by the way, so crude oil and Western Canada Select crude, they're both inverted. So this is supporting the Canadian side. So it's not all happy days for buying dollar CAD, but potentially, and I haven't shown the chart here, selling CAD yen, especially if the risk off story continues as it was on Friday. So the second slide, this is dollar CAD and real yield. So obviously you're taking out the inflation aspect of it that you had in nominal yields, and still, you know, the yield advantage is around the high since 2016, still supporting a case for weakness in the CAD. Again, as I mentioned before, my favorite pair to sell is CAD yen, taking the dollar element out of it. And the third slide, this is interesting. Now, you know, as you know, on Friday there was a lot of bond buyers. Global yields are down, so it's interesting because there could be a case for yields down supporting equities. That said, it could be a case of everything. You know, there could be a divergence here as global worries continue, that narrative rearing its ugly head again, and the bond market is flashing warning signs. So, you know, I've been talking to a few desks, and basically buybacks are propping up S&P and broad equities in general. But, you know, if they do roll over, it will be carnage for risk pairs, yen, and especially real risk, real carry, which is EM. Okay, so the next slide, euro dollar, not the easiest to trade. I tend not to, you know, lump in the kitchen sink on this one, just because you've got a lot going on. If I'm selling euro, I prefer euro yen just because of the risk off, and I try and take the dollar out of it, because that's kind of mixed as well. 111.85 versus 114.50, two very, very big levels. I do see this downside, but it will be choppy, it will be sticky, despite the German engine of Europe with a horror show of PMI. And finally, we're talking about that euro yen, my favorite pair to sell. You know, euro yen, as you know, is a product of dollar yen and euro dollar. European data just really, really ropey. Global slowdown causing yen buyers, yields low in the US, all makes this a sell on rallies. Finally, 125.50, the line in the sand. My name's Patrick Reed from the Adamus Principle, and watch that risk. Have a good week trading.